Good morning, afternoon, or evening, or whatever time it is you happen to be tuning in here. I am Keenan Brown, realtor with the Judy Lindsay team, and I am joined as always with my partner here, Denzel. No special guest this time, just us two. Denzel, how are you doing today?
Doing good. It's a nice Saturday morning here in Winnipeg and looking forward to shoot this podcast.
Yeah, man, same here. There's nothing like getting up, going for a workout, and then jumping on the call and talking about real estate for an hour or so. Um, Without further ado, we're going to get right into it today. Folks, it seems pretty nonchalant to say, but the Winnipeg benchmark price is actually at an all-time high again. We are at 452,700, which is up from last month by about 0.33%. That brings us to a total year-to-date gain of 9.11% and 5.55% from the 2022 former all-time high. So this is a fair bit lower than I had originally predicted for June, where I'd been saying 472 would be our benchmark price top for the longest time. But it looks like we fell a little bit short, and we're going to break down some of the reasons that might be the case. But before I do that, Denzel, how are you feeling about the benchmark price action this year so far? And are you surprised at anything particularly to do with the data from this most recent month?
Um, I'm surprised to see that it's still quite busy. I actually felt midway through June as we tapered off into kind of the end of the month that things were slowing down, but it might have just been my pipelines that might have not had been as busy because I know that you, with all of the listings that you have right now, are obviously extremely busy. And a few other agents that I recently spoke with actually had a pretty busy end of the month where typically, those times a year are historically slower, right? But
Yeah.
what I'm noticing like right now, as in today, July, what's the date today? The 19th. I am starting to see the market slow a little bit more. There's not as much activity on listings, depending on the price, obviously, but not nearly as what we were seeing back in March and April. So, I think that it's kind of expected to see where things are at right now. I forget where my prediction was. I think I was way low at like 430 something or 440 back when I had tried to predict where the benchmark price is going to be. But yeah, July again, it's kind of similar to last year. I had a lot more property on the market during this period last year. Um, but I just feel that with people now accustomed to the higher rates, uh, it is what it is, right? People are just saying, well, this is what we're faced with, and it looks like it's going to be like this for the foreseeable future. So let's just go out and buy or sell.
Right. And that comment about the level of activity, I think, is important because I'm still looking at the sale history on MLS and I'm blown away by some of the prices that are being paid for properties out there on a daily basis still. And again, it's July 17th. But on the listing side, I can see the activity that the stuff that I have on the market is actually getting. And just not bragging, just saying, I think I put 10 properties on the market this month so far. So I've got a pretty good understanding of what people are looking at a variety of price levels and seeing the activity and hearing the feedback and understanding the buyers' situations. And what I am definitely noticing is the offers are still coming in high, but they're coming in lower quantities and often with more terms and conditions than you might see in March or April. Denzel, I think you could probably attest to that. I know that you may have not sold a flip in June that I can recall anyway. Maybe you did, but a lot of stuff that I saw personally was high, but with financing, or high, but with inspection.
Yeah.
And I think that's an interesting summer feature just due to the lower volume, but higher quality of offers, if you know what I mean by that. Are you still there?
Yeah, I'm still here. I got a
Oh,
little one.
okay. I was just making sure that you didn't disconnect. I just thought it cut off. But
Yeah.
um, So one other interesting note about pricing, actually, we hit an all-time high in average sale price as well, which was 473,171 specifically. And for those of you wondering the difference between the benchmark price for detached homes and the average price for detached homes, the average is calculated monthly, whereas the benchmark price is adjusted based on product with the low and the high ends normalized. It's a complicated calculation done by the Canadian Real Estate Association. They don't actually even release the formula that they use, but they claim that it makes the data uniform across timelines and accounts for differing trends in the needs of the purchaser. That's their almost word for word description of the benchmark, by the way. But I've always said that when we have an average price significantly higher than the benchmark price, that actually bodes well for potential gains later into the year. So as Denzel said a second ago, he mentioned that this is a time of year that traditionally, at least in his experience, has been rather slow on the listing side and maybe even the buyer side too. But Denzel, when you see an average price as high as 472 and we're at a benchmark of 452, especially in the face of very probable interest rate cuts in as little as 11 days, are you thinking that this summer has a lot more distance to run than last year or the year before?
I think that the with the benchmark being where it is right now, I'm not quite sure if there is more room. I mean, if there is, it's not going to be a significant jump where we saw that in from like base like January to say April.
Mm-hmm.
If anything, we might see maybe another $5,000, maybe if we have a strong fall. But I think that the market is certainly kind of peaking.
Mm-hmm.
We should see some a bit of a slowdown, maybe some price decreases just with regards to the benchmark. And that I know for sure, just talking to a lot of other flippers, some of their product is actually just sitting right now.
Mm-hmm.
There's lots to choose from, right? And so when buyers have a lot to choose from, flippers, investors, they get a little nervous. They price reduce aggressively, and all of a sudden, prices start to fall a little bit, or at least the average.
It's true. Like when the buyers can spread out, all of a sudden things get a little bit uncomfortable for the people that have property to sell. Like right now in West Transcona 3L, there are four listings: 339, 349, 349, 379, all within probably less than a 5 minute drive from each other. All of them about 1,000 square feet, all of them mid-century builds, bungalows, split levels, whatever. That's not a traditionally available kind of product, if you know what I mean, in that kind of volume. And in the spring, those listings would maybe be a week or two apart. But in the summer, it just so happens that circumstances allow that product to hit the market at once. And when buyers spread out, that's usually what creates the seasonality effect that we see, where prices do tend to taper in these months, just due to lack of efficiency of the market, I guess, if you will. But extrapolating beyond the scope of our city, we've now talked about how we think the market might be cresting here, and how if there is more runway, it's not going to be very significant in terms of pricing. Winnipeg is actually performing a lot better than much of the remaining Canadian metro areas. I don't know if you saw in the article, Denzel, but Canada-wide, Winnipeg is actually second overall in terms of the benchmark price, at least, in terms of price action in the last 20 years. And that has surprised me to no end. And most people that I share that statistic with are pretty blown away by the fact that on a percentage basis, such a easily ignorable city is performing so well and is so investable. Do you have any comments on what's going on in some of the bigger markets and why they're trending downwards? Or do you think that Winnipeg has a special sauce that just people haven't realized yet?
Well, regarding the bigger cities, I just think that they ran up so high in price, and you get this ecosystem with both high interest rates and high prices. It just, your return on investment for someone, let's just say with $600,000 to spend in these bigger markets, it doesn't go as far,
Mm-hmm.
especially when those markets are mainly focused on appreciation. That's what my perspective would be. Like if I had 600 grand and I just didn't have too much knowledge about real estate and decided to invest in, say, in a city like Vancouver, I'm gonna go buy something, spend my 600 grand and probably just break even, right? Or even lose a little bit of money every month, if it's like a buy and hold rental property.
Mm-hmm.
Um, so when you don't have those huge jumps anymore because it's just not that sexy to invest in those areas, it's not really that appealing as an investor. Now, Winnipeg both has a combination of, we're growing as a city. Uh, there are tons of first-time home buyers. We probably have the highest and best affordability in the country, where you have people relocating to Winnipeg just so that they can afford more house. And yeah, I just think that it's a hot market to invest in, both for whether you're just looking for buy and hold or flipping houses. There's just a lot of opportunity in Winnipeg specifically, and I think that's why we have the growth that we've been seeing as opposed to the bigger cities.
I agree. And I've been telling people for a long time that your dollars go a really, really long way here. And if anybody is listening and you're from one of the larger markets, I invite you to have a really hard look at opportunities here in Winnipeg as an investment. We have very competent property managers here. We have a wide variety of very, very solid products at rock bottom prices compared to especially Toronto and Vancouver, but also nationwide. Like go to any other province and compare product for product, price for price, and Winnipeg will stack up among the best, especially when you factor in um, the features that the city actually has. Like our metro area is now it's approaching 1 million as far as I know, based on the most recent data. And that seems to be the Goldilocks zone for cities these days, where once you get significantly over 1 million, it becomes okay. Now we're just like a huge city. But once you're at this level, you get most of the stuff that you want, and you don't actually have to sacrifice that much. So I do encourage you guys, if you're listening from afar, uh, give Winnipeg an honest look. I think you'll be pretty surprised at what you find here. Um, so on that note, if you're looking to buy in this market, which Denzel, I'm curious about how you're feeling about loading up on inventory for the coming year or even the end of the season here. Uh, what do you think you should be doing as a purchaser of real estate, either as a flipper, an investor, or a home buyer, in your eyes, to have success for next year?
Well, I think that the way that I'm going to position myself is for a really busy spring next year. Obviously, just historically, spring is always where we will see some of those price increases. So if I could buy right now, I'm looking for probably some possession in and around late to mid-October, so that if in the event the property that I do buy needs some kind of exterior work to
Mm-hmm.
the actual house itself and not so much the landscaping, um, I can still have enough runway in terms of just the weather to get that done and be ready when I do go to list that property in, say, March, when it's still cold out, and you can't really do anything to the exterior. Uh, that's would be probably my main focus. The possession date is super important. And some projects now, with the experience that I have doing some pretty heavy construction, whether that's like replacing sewer lines or digging out foundations and repairing them. I'm kind of under the impression that the faster you can go, the better it is for your business, unless the margin's like significant. I'm talking like six figures. Um, it's better for you to just kind of look for those cosmetic ones and move quickly, especially in a market like ours that can change on a dime, I feel. I think it was in last month's podcast, you said you weren't quite sure when this market's going to turn. Like it could be this coming Monday and it just drops dead for one reason or another, because everyone's out of town, everyone's at the lake, or
just not thinking about real estate, right? So now that's the summer, right? But things change. Government intervention can happen, and so we have to be diligent in knowing what's going on in our country and how that could affect real estate values. And yeah, just making sure that the renovations that we do are sharp still.
Makes sense. And it's true. I still don't know when the market might turn. It could be today. This could be the end of the summer market, if you want to call it. And we can move into what are usually called the dog days, where people list stuff and people buy, but it just takes longer and the efficiency goes down and everyone becomes sluggish. Now, what I'm interested in knowing is on the 30th, we are very likely to get an interest rate cut. Most people are expecting it to be the case that we get at least a quarter point, and that might stretch out the season a little longer. I don't know that for a fact, by the way. I'm totally going on a hypothetical basis here. But the strategy as an investor of any kind should definitely be do the best deal possible, take possession later, and try to get it up in spring. Um, I think I totally agree with what you're up to there. And I'm actually kind of curious to know, as somebody that has product still to come onto the market this year, at what point would you say you would almost rather hold that home until the next spring versus listing it late season? Is there a magic line in the sand, or is it just based on the situation and the circumstance?
I think it's really going to come down to kind of looking at that specific neighborhood and knowing what the inventory looks like. And if the neighborhood that I have product in, say, only has 3, 4 houses for sale, and I know that I can come to market and be priced aggressive enough where I know that I could beat out the other properties that are listed, then yeah, I'm going to consider listing that because we actually did have a pretty decent winter, or late year, I should say, like just before Christmas. We had some pretty strong sales last year in 2024. And so that could very well happen this year, where people are kind of on the sidelines, but buyer demand all of a sudden starts to ramp up again, especially with who knows how these interest rates are going to affect buyers and the way they think about the market and whether or not they're going to go for it. But yeah, I think it really comes down to where your house is. Like, for example, if I were to list a house in the west end of Winnipeg, I'm talking about like 5C, I go
Like
on
Sergeant Park kind of thing. Yeah.
Parking Park. There's like 18 houses for sale, all for 249. You know. Um, what is the exact number anyway, Keenan, right now?
So right now in 5C, there are actually 15. Well, there's houses, vacant land, and duplexes. So there's 15 total actives. If I look at the number between, let's just call it 199 and 300, there's 1, 2, 3, 4, 5, 6, 7, 8 listings in that price range and a 310, all right there. So
Yeah,
the days on market for some of them are low, and for others, it's like 2 months, which
right. So
that's a tough market to sell in if you're anywhere in that meat grinder of the 200,000 range, right? Like, how do you price so specifically to the 10,000 that you're going to stand out when
right.
the purchasers could technically have that kind of choice within the area?
Yeah. Yeah,
It's
so like, that's just a good example. There's a lot of there's options out there for people and they easily can go house to house and cherry pick the ones they really like. So this is where we need Keenan Brown's expertise to price our properties so well that we get the most attention. Um, yeah, so that's kind of my take on that.
okay. Well, it's sensible. Um, let's just flip the script here. Let's say hypothetically you've got properties to put on the market in either July or August, like next 4 to 6 weeks. Are you going, assuming it's not in an area that's very high saturation with a lot of activity and a lot of options at similar price points, are you pricing very aggressively and going lower than you probably should, hoping for multiples? Or are you considering pricing closer to where you want to end up, but still being attractive enough that people come through the door?
I think that I heard this from another investor actually this year, and his strategy is to, and I don't say that, I'm not saying this is the best strategy,
Hmm.
but he's found a lot of his success pricing at maybe like a $5,000 profit, like at his list price, knowing that that's probably the price that's going to get the most attention. Because even now, you and I, Keenan, we have a couple of properties on the market together, and these are some of my rental properties, and I look at it and I'm like, well, what do we need to price these properties at so that we can get the most attention in a slow market like this? Right? And it's like we come to market and we get six showings. And out of those six people, someone might be able to afford, 35, 40 over our asking price. Not to say that that's where it's going to land, but because we priced it in such a way that it's going to attract the buyer to even just go have a look, that's what matters, right? Like just having the people in the door to see it is what matters. And it's tough. It's like almost low-hanging fruit to do something like that in a time like March where you just like price it really low and you have like a 90% chance that you're going to go over just because of the price. But you and I have had some summers where we didn't really have the kind of success that we wanted, and I think we've kind of have a better idea now how to approach summer listings, especially when you're trying to get a house sold quickly.
Right. And I think that that balance of time versus, what you end up with is an important thing for investors and actually just home sellers in general to consider. That a lot of people take the position when they put the property on the market that if it takes 2 months to sell, that's fine. But then week 6 into that 2 month period comes in and the question marks start to come of what's wrong with it. And if I'm buying this thing, I better get it inspected now because clearly there's something wrong if it hasn't moved yet. But um, by doing the strategy that you described in pricing low, you eliminate a lot of that. You get probably to more or less the same place just faster. So I do agree that that is probably the more efficient way to go about it. And I know that you've got things still coming this year, and I support the strategy. I think it does make everybody's life easier. Yours, the realtors, for what it's worth, because now I don't need to go and worry about this property for months and months, especially if it's in a rougher area. It's like, do you need to check on it? Did it get broken into? In a worst case scenario, which can absolutely happen. Um, really does make a difference to just get these things off the books faster. And in these multiple offer situations, you are often just getting the outcome you would have gotten one way or the other, but saved yourself 4+ weeks of hassle to do it. Um, so yeah, I think that that's very reasonable. But just one other comment on what you had to say was in a slower market, and I wanted to break down, are we actually in a significantly slower market? So looking at the sales data for detached homes here, we are at a very, very similar level to where we were over the last 5 years. We're higher than 2023 June in terms of number of sales and 2024 by about 100. But on the flip side, we're about 150 sales under where we were in 2021 and 100 below where we were in 2022. Now, dollar volume much higher, average price much higher. From a ratio perspective of sales to current listings, we're actually among the highest we've been, meaning uptake is very good for detached homes citywide at 82%. That's very, very strong, very high absorption. What do you think overall of the uptake in relation to what's being brought to market? I know we've talked a little bit about how these like 20 offer blowouts are far less common, but at 82%, I can't look at that and say that that's slow. Any comments?
Yeah, I guess I'm more obviously focused on some of the investor product out there, you
Mm-hmm.
know, with the network I have and the people that I speak to and talking about like what kind of success they're having out there right now. Um, we both know there's a property out there. I'm not going to say the address where we've seen significant price reductions because they're trying to get something gone.
And that
Yeah.
shows me like, well, they're obviously using data when they probably comped out that property from a time where it was ultra hot, right? And so then you
Right.
can bring that same energy into the summer, and it's like, well, that's not really the price of your house anymore, right? Not and so I might have a bit of a bias towards thinking things are slow because some of the investor product isn't flying off the shelf, but the regular homeowner stuff certainly is moving because I still do track that. And I do notice that it is moving quite well. You know, we did get rid of or sell some of the rental properties that I did have that I had thought that I'd put together good enough to have some homeowners move into, and those were in areas that were not the first on people's lists, right?
Right.
But they still moved. So, I have another friend of mine who just recently sold a rental property where he was very surprised with what he ended up with there, and I guess now looking closer at the data, I think I'm kind of bringing more of my thoughts around investment properties and how those are trading as opposed to just the whole picture,
Right.
which is making me feel like it's a little bit slow or it's just like that, you know? Um, yeah, that's my take.
And that is actually rational and reasonable because I've seen that too. Right, like for those people out there who have tried to sell a less than ideally located rental, you probably are feeling like the buyers have all the power right now. And that's natural when you've got a situation like that. But um the higher end flips or the more expensive product that maybe went over budget when somebody was doing their project, or maybe it was just a bad buy and the ARV was wrong, or who knows what could have happened, or maybe somebody believed the market would be better than it was by now. Like any amount of things could have been the reason, or maybe the product just didn't turn out. Who knows? But at this time of year, it's not super easy to get bailed out. Like the market will ignore you. It has the ability to do that. And I definitely think that is what you're feeling. Uh, do I more or less have that right?
Yeah, for sure. Like I said, if you're not priced right in the summertime, you're gonna feel like it's slow. Like I having a conversation with a friend of mine, he has a listing right now over in Southdale, beautiful house. And he's like, Denzel, I don't know what's going on. I have 6 showings on this property, and he's in the mid fours. The house is probably worth the mid fours, but again, it's not really the market where you're going to get a blowout with like 6 7 offers, and it's easy to tell that you're going to catch what you had thought 2 3 months ago when you first bought that property, right?
Right,
So
right, right.
I'll say it again, pricing is so important if you're wanting to get the result that you're hoping for, and it's really hard to even predict and be on point like right to the penny as to what you're going to get, you know but like if you're inside 5 to 10 grand of what you were shooting for, like that's not a bad deal, right?
Well,
Like
oh, that's pretty accurate, especially
that's
when the
pretty
numbers get
accurate.
high, right? Like I've always said that if you're within 10 grand and we're talking like well over 400,000, like that's what more can you ask for? Like that's by percent insane accuracy. It's if you're missing by 10 or 20 grand and the ARV was 200, you might have a problem. But honestly, uh, I know how you're feeling and I know how your friend is probably feeling. Like there's a lot of good houses on the market right now that hit, and probably the expectation was we're going to get 25 30 showings, probably 7 or 8 offers on offer date, mostly unconditional. Some people with financing, it'll be fine. 50 over, yeah, just done, gone. But I don't know that that's the strategy that August is going to bring. And I know it's only July still, and for those of you listening, you're going to be listening in July most likely. But by the time August comes, the game might change. And one of my mentors, he's been on this podcast for at least twice that I can remember, Brent. He has always used long weekends as mental barriers for purchasers and their psychology in the Winnipeg market. So the August long is a big one for him, where he says you need to start thinking about pricing differently after the August long. After the Canada Day long weekend, it's still different than prior to that, which is the May long is the next one. And then before that, it would be Easter. And before that, the next really major one would be in Manitoba. It's called the Louis Riel long weekend, but it's basically the week after Valentine's Day for those of you who aren't actually from the province. And those are kind of the big psychological like pricing barriers up until Thanksgiving, which is the next one where it's like, okay, once Thanksgiving hits, you've got to start being very careful about what you're doing. And this is the time where you're not super likely to get a bidding war, especially if you're not in a top tier or high liquidity location. But good point to bring up, because I have heard a little bit and seen with my own eyes property that I thought would be like, whoa, this is a blowout. Like somebody should be like breaking the door down to get in here. I need to set the showing schedule to like allow multiple. And you just don't. It's not how it works at this point. So good to bring that up. Investors out there, if you're pricing product right now, give me a call. I'd love to have this discussion with you for your own address and your own situation. That being said, though, Denzel, we did still have 57% of homes sell at or above asking price last month for detached homes citywide, which, I mean, that's not a bad rate, but I'm sure it's going to be 54 or lower next month. You know?
Yeah, I think that you said it was about 54%.
I said it's 57. I think it's going to go down next month, but like that's a high rate for stuff going above. Like we haven't had that kind of ratio since probably 2022.
Yeah. Like I said, I think people are more accustomed to these rates, and I'm not going to say desperate, but it's been a song that's been playing for quite some time now about like having to pay more than asking price to get the house, right?
Mm-hmm.
A lot of these conversations you have with your agent when it comes down to it and you're down to the wire and you're like, okay, guys, you want to make any changes? And the conversation is along the lines of, well, what do we have to pay to get the house?
Yeah.
Right? It's like, we really need that house. My daughter wants to go to this school, or our family's growing. There's a bunch of reasons why people need to move, right? And they stop looking at the cost, the price, and they just consider, what's this going to cost me every month? Okay, so it's going to be, my mortgage payment goes from 1,000 to 1,100, but on paper it's like I'm paying 20K more, right?
Right. Well, exactly.
Or these people are like, the agent might say something along the lines of, if we lost this house by a couple grand, how would you guys feel about that? And then they're like, well, I'd be devastated. Okay, so we're gonna have to pay this to get this probably. And I'm not saying like the real estate agents are gonna lead you into like overpaying for something, but again, sometimes it's not so much about, it's about the house, right? It's a home for these people. And yeah, I think people are over the whole interest rate thing at this point.
Well, they definitely are. And just to speak a little bit about rates, I've seen sub 4% offerings at this point in time. Like they're available. And for many, many years, that was just what mortgages cost. Even recently, actually, like forget about the pandemic era, because that was obviously in hindsight a very, very outlier kind of rate environment. But I remember when I started in real estate in 2018, threes and even 4% mortgages were totally normal and not in any way, shape, or form questionable. Like people just assumed that that's what they would be paying for their mortgage.
Yeah.
And now it's, I guess it's a little bit of the people that might have missed out on the 2% or the sub 2% for those of us who managed to actually secure that. Maybe there's a little bit of, well, if they got it, I want it too, but it's just not likely to be available again anytime soon. Now, that being said, there probably still will be lower rates available in the semi-reasonably near future. I don't think we're going to 1.5% mortgages again for a while, maybe ever, but at least not for a while.
Yeah. And you look at where the rates are now and you're just like, this is the average, or we're pretty damn close to it.
Yes.
So
And
it is
well,
what it
go
is.
ahead. You can finish your thought. I didn't want
Oh
to.
no, I was just saying that like it is what it is. So like my brother, he's actually gearing up and wanting to move towards buying his first house, and he's like doesn't even care about the rate. He's just like, I want to buy,
Yeah.
right? Like
Well,
it's not a thing anymore.
and that's how a lot of people feel. It's not even about the what's it actually cost to do it. It's now I need a house. Like figure it out.
Yeah.
You know what I mean?
Yeah.
So I can't blame them. But on the topic of rates, I wanted to. You saw the performance analysis, like hot or not article that I put out
Yeah.
on the 10th, right, Denzel?
Yep.
Okay. So with rates in mind, one of the cool things that I wanted to talk about on this episode today was the fact that the high end areas are the high performers this year in a rate environment where most mortgages are over 4%. So looking at the top of the list, we have Tuxedo leading the way at plus 12.84% year to date. And if you look at the 17 out of the top 20 performing areas in Winnipeg, 17 of them are actually priced above the benchmark price currently. So our more expensive areas are carrying the benchmark and outperforming. Our average areas are just below the benchmark, and then our low end areas are kind of acting as an anchor and holding things down. Are you surprised at this? And how does that make you feel as somebody that trades real estate professionally? Are you focusing more on the higher end flips, knowing that they have, at least so far this year, tended to perform better?
Well, with that, with us talking about it now, the high end market has always been um, buyer beware. Like with investment, especially because like we said, the market can change on a dime, and all of a sudden, it's not cool to buy those things
Mm-hmm.
because all of those buyers that were looking in those prices are all spent, and then they reload up again and they do whatever they do. So, um, for me personally in my business, I don't know if I would play in the $1 million range. It's really going to come down to what kind of work a house needs for me to go there. Uh,
Mm-hmm.
we have our ways of finding opportunities, Keenan, and we've came across some leads recently where you could buy that thing and just go and list it after, right? And I'm talking about the
Yes.
off market space. Um, and it might be like there was a house I knew was available, 725 purchase. It's like an 899 list, and I'm talking as is. So that's an example of that right there is a risk that I would be willing to take if I was going to go and spend that kind of money on a house, knowing that like for me to get it to 899 is very low effort, right?
Mm-hmm.
Whereas like you go buy in Tuxedo for 550 because the house needs everything, hoping that you can move that thing to 950 or even $1 million, right? Like that's a lot of heavy lifting to get that to that point. And
It,
you can go into an area that has like maybe more affordability, like maybe the top end's like 650. Like we just found a house in Island Lakes, and we're talking about we bought it under five, and it's not going to take it a whole lot to get it back into like the mid to high fives, right? That's a opportunity where the effort to get it there isn't very high. And I think with my experience now, I'm just kind of like, okay, it's not a bad thing to take on those massive projects if the margin's there, but it shouldn't be where, at least for Winnipeg specifically, where you have six of those on the go, right? Or
yeah.
four of those on the go, where they're like massive projects. You're like moving walls, you're changing the electrical systems, HVAC and plumbing and all of these things, permits, the city's in and out. Like it's a lot of work. I was just talking to a friend the other day and he goes, "Hey, Denzel, how many projects do you have on the go?" I'm like, "I have like something like seven." And he's like, "Well, wow, you must be busy." I'm like, "No, these are different. That they're like more cosmetic, so it's not that hard. But like we were just trying to describe like what it takes to like install an exhaust fan in a bathroom in a renovation, right? Like I've done like you're dealing with sometimes with like four trades, the framer, the drywaller, the electrician, the HVAC guy, um, the painter. That's five different people just to put an exhaust fan in, right? I mean, sure, it's different if you do the work yourself. So if you're listening to this and you do your work yourself and you're like, that's why you have problems, Denzel, because you're hiring everything out. But you know, it's a juggling act. So now you multiply that by five, six houses, never mind having to deal with the inspector at project A and then zip over to project B to make sure that the materials got there. Like it's a lot of work. Um, so I'm getting a little bit off track here, but going back to does that information of the high end um, market moving the way that it is want or not want, but kind of influence me to perhaps go there? Probably not. Um, I believe that, $500,000 in investment capital, you can go buy $200,000 houses, spend 50 on each, and maybe make the same amount that you might make on that $1 million flip.
Makes sense. Now, Tuxedo is the only one that is consistently in the $1 million range, but some of the other high performing areas, like you mentioned Island Lake specifically, which has a benchmark of 617, and it's up 11.82% year to date and is still hovering pretty close to 80% absorption, which is rather high for that kind of price range in a city where our benchmark's in the 450s. Um, how are you feeling about the 600,000 stuff? Because we've got in the sixes near the top of the list. Like I'm just gonna look close here. There are 11 areas that are above 10% year to date for the gain, and one, two, three, four, five, six of them are at least six, if not 700,000 benchmark areas. Sage Creek, north part of Charleswood, Island Lakes, Linden Woods, Bridgewater, notably, and Richmond West are the areas specifically. Uh, any difference in your feelings towards those? Because all of them, at like a bird's eye glance, have relatively high absorption, pretty high benchmark prices, and have grown a fair bit. Um, does that change anything to you?
Yeah, like I think I'm warming up more towards like that price point. The more and more I see opportunity in that price point, I see that it's certainly uh, up there that at that price. There's still a lot of activity. There's $650,000 house gets you like a new construction home fully renovated, right?
Mm-hmm.
Uh, 1,500 square feet bungalow in River Park South or in Island Lakes or Linden Woods. Like that's a really hot commodity, to have something like that. A lot of people want that. I'm at an age now where people who have bought their first homes when they were 22, 23 years old, I'm 29 now. They've had kids and their families are growing, and so they're the move up buyers getting into that price. So, I think about kind of just where I am at in my life and where a lot of my peers might be. And, a lot of my friends have moved up in their careers. They're making more money and they can afford these things. Where when I first got into the business, I'm like, man, who the hell is going to afford that? You know? And I think what also changes my mindset is the fact that the price is so high as well. We're at
Mm-hmm.
452, like to go 200 grand higher than that. I know it sounds like a lot of money, but it's totally attainable for people in Winnipeg, right? Like to go
Yeah.
from 450, like I'm thinking of an area right now where 450 is kind of like Charleswood. 450 is something where like it's not uncommon for someone to pay over 400 for a property with like 1,000 square foot bungalow with a garage. That's
Mm-hmm.
that's what gets you 450K. That's what you can get, sorry, for 450K. You spend another 200 grand, now you're into like these more suburban, newer development built in the 2000s areas, right? And yeah, I think that with all of the activity that I'm seeing and the conversations that I'm having with just people day to day that aren't in real estate every day, I'm warming up more and more to wanting to venture off in there, because the nice thing about that price point as an investor too is there's less competition,
Right.
right? Like,
That is that's a good point. And with a lot of these houses that, like the early 2000s builds, now becoming 20 or 25 years old, they're about at the point where they're going to start needing new shingles, and maybe they do need a full cosmetic refresh, and maybe they did get beat up. And all of a sudden, they're an investable product again, whereas before it would have been hard to do anything with them besides buy them for cheap. Right?
yeah, 100%. Like, um, you talk to a new investor and they're like, yeah, I'm looking for that $150,000 house. I could put 40K in and sell it for 260. It's like, yeah, you and like everyone else, like everyone wants that because everyone can afford that, right? Uh,
Mm-hmm.
but now once you have some experience, you've built up some capital, or you have investors and stuff, like going into the like going shopping around in the 400s, and you're gonna go flip it for 625, 650. Like there, those opportunities are there. And the nice thing is too, like if you get into those areas that are more like the Island Lakes or like the Linden Woods, like the houses that were built in the 2000s, like the expectations for those homes to reach the 625 to 650 isn't to the point where like you got to have heated tile floors, like really fancy hardwoods and quartz countertops. Like it doesn't need to be that. It just needs to be clean. And like the materials that are used in the properties, the expectations isn't very high. I don't know if I'm wrong, Keenan, or like if you might disagree with that, but I don't know. I just think as long as the house is newly renovated with some luxury vinyl planks, maybe a newer kitchen. I know a guy that just paints the kitchens, throws a quartz countertop on there, and that's kind of the ceiling as to how far it needs to go in some of those areas because there's not a lot of them, right?
Right. So I think what you're maybe alluding to is nobody's expecting ultra luxury finishes to get kind of standard 600 plus pricing in there, which is true. A lot of the stuff that sells is lightly or not renovated, but well kept. And
Yeah.
so it's actually a breath of fresh air to buyers when they go in and see some of these products like these cab overs or these nice 2 stories or bungalows that have the double attached garage with the nice front driveway and the reasonable backyard with a deck, to come in and say, wow, somebody painted this house, added some pot lights, did some flooring, and the kitchen looks like they took care of it. There's quartz, there's backsplash. Cool. Also, it has the bedrooms I need and it's where I want it to be. What's the problem? I'll do the rest.
Exactly.
But
Yeah.
in some areas, if you're trying to hit ARV or the highest possible, you're competing against stuff that's been totally redone already, but it's just not common to get totally redone homes in those kind of areas. And that surprises a lot of buyers, by the way, when they dream of moving into their Lindenwood's dream home. They think about it, and then I take them to what's actually there, and they all of a sudden go, oh, that's not what I thought was here. Like I went to a party at one point with a friend, and the friend had a beautiful renovated, like incredible 2 story, and I thought that's how they all were. And it's like, not quite, buddy. Like, most houses don't renovate themselves. You got to kind of do it.
Yeah.
And looking at the market right now, like I'm pulling up Lindenwood's actives. I'm not going to read out addresses. There's 3 properties in the entire area right now. And just clicking through the photos of each one of these, I'll be honest, they're all in the older part of Lindenwoods, like the 80s development section, not the newer part. So
Yeah.
could be a little wrong here, but they're all between 550 and 650 right now. And not a single one has been renovated. They've all just been maintained from their 80s situation.
Yeah.
So, and that's normal, by the way. I've shopped in Lindenwoods a lot. I've shown tons of houses in there. That's how they look. And they still sell at a benchmark of 700 plus despite that. So think about that for a second. You renovate something in there. You don't need to go totally bonkers on it, but just also don't ask for a bajillion dollars. Ask for something normal and have a respectable looking product, and somebody's going to buy it. It's just you can't ask for something too crazy. That I think is really what it does come down to, if you know what I mean.
Yeah, and like I would go as far as saying too, um, areas like River Heights or or uh what's that neighborhood South Osborne, Riverview,
Riverview, yeah.
um, parts of St. Vital. The fully remodeled stuff is an expectation. Like if you
Mhm.
want to hit that ARV, you're gonna have to have some of the more luxury finishes, like open concept with a big island, quartz countertops, heated tile floors, like stuff like that. You're gonna need to do that to get the ARV sometimes, because those areas have a lot of renovated comparable sales to go off of and say, you know, this is different from that because it had these kinds of finishes, and this is why someone paid 70 over ask or 80 over ask. Um,
Mhm.
Going back to the whole thing of like, Denzel, are you thinking about maybe looking at some of these places with 650 or 700K ARVs? Yeah, I would, but like I said, I'm more interested in like the more low effort stuff if I can get into them. Not to say that I'm not ever going to look at a really heavy duty construction job anymore. But you know, I just will always go back to that place that on in Island Lakes that we got. Go in there and it needs some new flooring, it needs some new paint, it needs, I wouldn't even say a new kitchen, maybe a new countertop. Uh and that place will look a lot different, you know. Um
Mhm.
and then all of a sudden it's better than some of the stuff that's worth 580, you know.
And then all of a sudden, everybody wants it again.
Yes, you go, oh, this now you can see the separation and justify the value and why maybe someone's going to go out there and pay you 625 at a 589 list because it's got the new floors that someone wants to do and the basement's finished and etc. Right?
Yeah.
Um, Now in an area like River Heights, uh, yeah, people are just really picky over there too, right? Like they'll go in and pick your flip apart if the quality's not there.
They indeed will do that. It's not so it's not so easy to sell in those kind of areas. It's actually, while I love River Heights, it can be somewhat of a dangerous area to flip in because the buyer pool is so skeptical of whatever you're putting out there. And River Heights is known especially for foundation problems too. So you better not buy something that has even a little tiny wobble and have something even slightly out of place if you want highest and best for that. But I think there's a lot of forgiveness for some reason in these newer areas. People just turn a blind eye, and I wish I understood why, but it's a little bit odd to me. It's like they're buying the area more than they're buying the house. But in River Heights, you'd think they'd buy the area because everybody loves River Heights, like
Yeah.
of course, right? But um, yeah, they do tend to be a little bit more choosy, and it's funny you should mention that because I did notice that in the more middling MLS areas, like, and by middling, I'm gonna roughly say 300 to 500K benchmark, and that range could shift 50K either direction probably. Like it might be 350 to 475 or something, just for example's sake. Um, Most of those areas, while their pricing isn't going totally crazy, they're generally sitting at about a 6.5 to an 8% gain. The absorption in all of this is insane. Like we're talking the vast majority of these areas between 85 and 90% uptake, all of them at least at 75 on the low side, and then some of them even at 100%.
Holy.
As an investor who's going to be flipping in those areas, Denzel, do you care more about the pricing gains and acceleration in the market, or do you care more about knowing that the absorption is super high in whatever area you're selling into?
I think that the absorption is the most important thing because
Mhm.
the reason why I say that is, first of all, it shows how healthy a market is. Like if there is property that's getting listed and it's trading and it's not sitting, um, that's uh, that's information that I can live with because the price gains and how fast things are moving, that can change year to year, right? But if you're in an area where there's always a demand for it, such as like we'll just use River Heights as an example, just because I know people are always wanting to move into the River Heights. Um, it just gives you certainty that if should the market correct while you're doing your projects, um, you know that you're going to get that project off the books if you need to. I remember having a house in Norwood Flats that kind of got stuck because we listed it at a time where it was, well, there was a few things that kind of went on with that listing, but and we actually did in fact get an offer on it. Um, but it's just at that time, the thought was it should sell and it didn't, and it's just frustrating. And psychologically, it's just something for me. If I know that if everything goes to shit and the prices fall, but I can still exit through a sale, that makes me feel pretty good.
Mm-hmm.
Yeah.
So liquidity is the name of the game.
100%.
And I've said that for many, many years too, that I think I'd rather be listing into a very liquid market, even if it's not accelerating in price, as long as they take it, they take it, they take it. If the prices are consistent, that's fine. Even if they're going down, but they're still being grabbed like the second they come up, that's not a problem. Then at least we have some control, which I think is what you're really alluding to here.
Yeah, and as a business owner, like cash flow is so important. Like you need to make sure that money's moving because opportunities are quick and real. They happen fast in real estate, especially with the resources that we have, right, Keenan? Like,
Mm-hmm.
I just got a lead, but while we're talking right now, and I'm probably going to be talking to you after about it to find some more information about it. But opportunities come quick, and the faster that you can convert your cash, right, like your investments into cash again, the better off you're going to be. I think that I kind of look at it like this. It's almost as if the rental properties are kind of like your more long-term investments, 5 to 10 year uh, timelines. Your flipping is your medium-term investments, which can last anywhere from like 3 6 months to a year. And then your short-term stuff is like wholesaling, or as a realtor, that's you selling houses. That's your short cash, and so you kind of have these things all going on simultaneously and tracking them and knowing like when to sell certain items, right? And so yeah, I think the liquidity is the most important thing. Like cash flow is far better than your like whatever assets you're holding, in my opinion.
And that should be repeated for everybody listening, especially if you're getting started, right? Like that is where a lot of people go wrong in real estate, is they stop considering their ability to generate consistent cash. And it's either because their project goes too long or they sit on the market and they go nowhere. And it is very important to remember that getting in and out of stuff is the name of the game. Like you have to exit, and you have to exit quickly, and the faster the better. Time is money, money is time. So please remember this, especially if you're new to the scene, which I suspect many of you probably are. Final note here, and then we'll wrap it up for the day. But we're slowly losing our sub $300,000 benchmark category, and most of the areas that are priced that way, unfortunately, have not had a very good year. Which is surprising to me because I've been espousing the theory for a long time that Winnipeg's pricing actually starts at the bottom, and through the growth of our lowest end areas that homeowners are interested in buying, cascades up through the pricing categories all the way to the top, and then repeats as the year comes to its cyclical conclusion. In this case, what I started to notice is our sub 300 category, more or less, is only including areas that are primarily rental stock rather than homeowner desired areas, and are therefore not performing in a same type of manner as they have over the prior few years. any comments on the general performance of our 9 remaining sub 300,000 benchmark areas broadly, Denzel?
Um, yeah, I think as Winnipeg continues to grow as a city and the demand continues to grow for housing, it's going to get to a point where 5A is going to be where the affordability is for someone just starting out. And I think that might have been this. I know, Keenan, you and I are what, 6, 7 years in the business at this point in time,
At least, yeah.
effectively. Like we're not even a decade into real estate here in Winnipeg, and I'm pretty sure there was some conversations amongst some pretty smart people, maybe back in Guy's time, who were saying the same thing, saying like, just wait, the affordability is going to be in 5A. Like people are going to have to go there with the way the prices are going, and it's happening. Um, and I think that by the time Winnipeg reaches 1 million people as a population, I think the $300,000 category is going to be completely gone.
You're probably basically right. Maybe with the exception of like the most core
Or
part.
or like just in the hood, right? Like just like the really
Pretty
top.
much,
But
yeah.
even then, like we might see like a crazy rip in the north end.
That is
Well,
also
it's
possible.
tough to predict. Like
Uh,
there's some interesting development happening in downtown Winnipeg. Like they're remodeling or restoring and uh doing new construction of the whole entire Portage Place. You know, that area fully renovated and having that section of downtown um trendy and exciting to go back to again. It makes you wonder, I wonder how that's going to affect the values of the property nearby.
well, I've said for a very long time that specifically West Broadway will have another Renaissance period because it's not normal for a city to have an area that was formerly the home to so much wealth become so destitute without an eventual recovery. And I say that because West Broadway is full of very large houses that mostly got converted to multifamily and is now, in the opinion of many people who wouldn't normally talk about Winnipeg neighborhoods or real estate generally, probably at least a little bit scary to them. And I think that that area stands to gain the most from the Portage Place redevelopment. But to the same extent, the West End 5A is also very well positioned to benefit from that, as is anything within walking distance or so to the U of W. Now,
Yeah.
I also don't think that's going to happen overnight. That could be a
Yeah.
10-year process, maybe 15.
Yeah.
But it's still important to note that it's a factor that will certainly impact those communities. And for what it's worth, if you compare 5A, which a lot of people do stigmatize right now, price wise and absorption wise, to other analogous areas like maybe 4B, I would say that 5A has a lot going for it. And it probably is more primed to perform than any of the stuff north of the tracks.
Especially the stuff between Portage and St. Matthews, I think are all um Wolseley buyers are going to look at that and say, it's okay to go there. You know what I mean? Like, and
Mhm.
especially as like some of the landlords start to retire that have like ran their properties as just slumlords, right? And they start getting rid of these properties and the new investors come in and they can kind of turn those around and get um some higher quality tenants into those properties, I think can also help improve those neighborhoods because 5A is predominantly known to be a rental area.
Yes,
Like
no,
there's a lot of
it
people
is.
who go out there and buy property and they turn it into rentals, right? And that's really what makes there's not enough home ownership in 5A for to really see the pride of ownership on the street.
Mhm.
Whereas you go across Arlington and you walk Dominion and you're like, holy crap, like this is really nice, right? Or you're walking down Goulding and you're like, man, this is awesome, right? Like this is like everyone cares.
It's just it'll take a second for people to really have that click, but I do agree that a day will come And you can look historically. I don't want to get too off topic. I know we're almost at our time limit here, but 15 years ago, there were sales of vacant land in some of these areas for like $5,000 or less. Sometimes literally less. Like in fact, I'll pull it up right now and verify. 5A.
We need some $5,000 deals, Keenan. Where are they at?
Yeah, I'll try to find them, man. I'll try to find them. So I'm gonna just pull up vacant land sales in 5A. Um, in 2003, there was a lot on Victor that sold for $3,600.
That is insane.
In 2003, which is like not that far ago, there was a lot on Agnes that sold for $8,000 in 2006. Like just ridiculousness. And if I go like to the north end, for example, let's just see how that's looking. There was a sale for $1 on Magnus in 2009. The ad reads word for word: best offer takes it even if it's $1. Commission 40% of sale price. Purchaser responsible for back taxes. Rare opportunity to build without upfront cost. No demo. You know how long it took for them to sell that piece of land for $1?
Where was it?
On Magnus Avenue, 300 block of Magnus. How long do you think it took them in 2009 to sell that piece of land for a singular dollar?
Holy.
It took them 13 days to find somebody to take it for $1.
That's crazy.
Unbelievable. Like
the cheapest house we ever did was that one on Selkirk there for 18 or something, right?
Yeah, I think it was like 20 something. But like the point being is like if you would look at what was available 15 years ago in some of those areas, like think about what those pieces of land are worth now. Never mind the structure or any of that. Like we're talking about 10x gains in the context of 15, 20 years. That's unbelievable returns. Like 20x in 15 years is sickening.
Yeah.
You know, and for that $1 purchase, that's a one-off situation. There was back taxes. I get it, like circumstantial, but still pretty funny. A lot of people would have taken that on for $1. If you offered that deal today, it'd be gone in hours. Someone would do it. You know what I mean? It's not funny to think about, but
yeah,
sometimes, and I have said this for a while, there are people that buy in the North End, and if they can hang on long enough, it will go well for them, despite it being an area that has consistently not performed by percent as well as everywhere else. But every so often, it will just shoot upwards, and then all of a sudden, it's worth a lot of money. It's not a bad investing strategy. It just isn't for most people.
I mean, yeah, agreed.
Yeah, but any closing thoughts here, Denzel? Anything you want to leave the listeners with for this episode going into next month?
As we as we segue into the second part of the year, for those who listen and are, I guess you would call them experienced or seasoned investors, don't forget to take a little bit of time off. This is the time where it's okay where you can let Denzel get all the deals. No, I'm joking. But on a serious note, we all work really hard. I think that it's important that we take some time off to reset. The summertime's a good time to do that, even if it's a week. There's a lot of deals out there. For people that are just starting out, I think this is also a good time for you to get out there and look at property, because there's lots to look at with the inventory kind of at its highest. Is that right, Keenan, right now?
It's maybe not the highest, but it's definitely not low compared to the spring.
Yeah. So
just bear that in mind. Like we might still see our peak inventory in August or even September, but inventory right now is higher than it's been in at least the last few months.
Yeah, there's lots to look at. So get out there, get educated, find a realtor who knows what they're doing, who can teach you some stuff and is willing to put the time in. Yeah. Also another thing I wish I was, I had me to tell this to when we were selling stuff 2 summers ago, is just be patient and remember that the summer is a different beast and that you got to nail your pricing if you're going to go out and list something right now.
Exactly. Couldn't agree more. So folks, Thank you for tuning in. Please remember to subscribe if you haven't. Special thank you and special hello to all of the new subscribers from the Wealth Genius event last month. If you guys enjoyed this podcast, feel free to comment, give it a like, share, and thanks again for listening. Have a great day, everybody, and we will see you soon.